Hi, Andrew Myrons from Intuitive Finance here. Well, good news everyone. APRA's decided to announce that he's going to start to relax some of the rules and regulations that they've been enforcing on us of recent times. So who's APRA? As we've talked about a lot in the last few years, the Australian Prudential and Regulation Authority have stepped into our markets to just try and regulate, particularly Melbourne and Sydney markets, from overheating the amount of investors that were entering the market and taking on high LVR loans and also interest-only borrowings. And they thought that that was getting out of kilter with what the long-term averages have been. So we've seen a number of changes implemented upon all of us, where they spoke to banks and said, right, you have to limit your year-on-year investment lending to 10% of your book value. You have to limit your interest-only lending to 30% of its book value. And what that meant to all of us, some of those changes, was that we saw the banks getting a lot stricter, a lot meaner in terms of their pricing. So you now pay a lot more for interest-only investment lending than you do for a principal and interest home or investment loan. We also saw them starting to knock back and tighten the rules on certain types of investors and other things like that. Well, as of the 1st of July, APRA have now come out and said they're quite comfortable with the markets and that what they've done has had a positive impact. They've been able to regulate the heat in the Sydney and Melbourne markets, and they're comfortable with where the markets now sit. So they're going to reduce or abolish the interest-only lending restrictions and also the 10% year-on-year growth, and let banks going back to work to just allow them to do. So what will that mean? I think there'll be a few good things that come from this. Firstly, we should see the markets just ease slightly. Now, don't get too excited, everyone. Just because they're easing restrictions won't mean that they won't be still looking at over the lender's shoulders. So don't expect it to get back to where it was. It's not going to. The reason we have change on things like this is because they want to keep a balanced market. It was going too hot, it was unsustainable, and that's where we get boom bust cycles. So we're not going to see it get back to where it was, but what we might potentially see is some easing of some of the restrictions being enforced upon certain styles of lending. Maybe some loan to value ratios might start to increase. Maybe pricing. I think we're in for a pricing war. So all the banks need to lend money to make money, and I'm fairly certain that I would think that we'll start to see some of our interest-only loans start to reduce. We'll also start to see investment loans potentially reduce in price as the banks look to attract new business. And that'll give us also the opportunity to do just some pricing reviews on our existing business. So it should be good for that. But it's not going to get back to where it was. That would be naive to think. And APRA is still going to maintain its regulatory measures, i.e. it's going to be reviewing the banks, it's going to be looking at just their behaviour and making sure they don't get back to where they were, so that we continue to have a balanced market. But all in all, I think them at least coming out and saying that they're comfortable with the market and that the restrictions are going to start to ease is a positive. I don't think we should expect it turning around to where it was all of a sudden in 2018 and maybe 19, because the regulation and the scrutiny is still going to be there, but I think there will be some positive impacts. So I look forward to helping and working with you. Anyone that's got a loan that they think is too dear or too high, or someone looking to get into the market now that maybe some of these restrictions might ease, we'd love to talk to you.